You are one of the biggest payment processors in the world. You see a lot of data as the effect that this virus could be having on economic activity. What can you tell us?
Hi, thanks for having me. Yeah, it's interesting. We looked at it, and if we look on the traffic on our platform, we actually see very little on an aggregated basis. And the reasons for that are interesting, and that is that what we do with our merchants is we do a pass-through of the interchange of credit card cost, and that means that international traffic, if that decreases, that means that there are less cost. But as we have a cost-plus contract, for us it doesn't make any difference in how much we earn. There is, of course, at this moment less intercontinental traffic, so less intercontinental car traffic. So the card schemes see that, but for us it doesn't have an impact. And another thing is that we do a lot of like-for-like settlement, so we help our merchants to set up at the least cost way. That means that we don't charge unnecessary foreign exchange. So for others, foreign exchange is a large part of their business model, whereas for us, having an efficient setup for our merchants is what we do. So therefore, for Adyen, it has very little impact at this moment.
Can you just quantify for me, though? You said that there has been a drop in traffic. Can you quantify for me kind of what is happening? I'm trying to get a read on what the consumer's doing, what the global economy looks like right now. You are part of the plumbing. Can you tell me what that drop looks like?
No, this is because for us, we cannot get it out of the data. But what is the case why others see much more of it? So companies like PayPal or the card schemes is if international, if there are less travelers, if less people spend their money internationally, it impacts them more because for them that are more profitable transactions than standard in-country transactions. For us, each transaction generates as much income, so we don't have that. Furthermore, we are very, very spread, so we're not overly exposed, for example, to travel. So there are also industries where there could be positive trends because of this.
Yes, that is interesting, Pieter, because PayPal cut its revenue forecast, as did MasterCard, but now PayPal stock is higher, for example. It's bucking today's trend. It's up 1.5% right now. So clearly the street is seeing some positive benefits to this kind of event for payments companies as well. Talk to us about how you plan to take more market share. You obviously got the McDonald's mobile app payments and tens of thousands of Subway restaurant stores in the US and Canada recently. So congratulations on that. How do you capitalize on that success?
Well, what I particularly like about the quick service restaurants is that that's an industry where shopper behavior is changing. So people who go there expect to be able to maybe order online or on their mobile. Maybe they're in-store where they can order in-store on a screen. And that really fits what we can do for them. And those chains are all globally present. So to have a partner which can help them in multi-regions is very important for them. So it suits us very well. And that's what we decided ourselves. But then if you say, yes, let's look at that vertical to then be able to announce those names. And of course, on the back of them, other quick service restaurants are interested as well. You never know if or when that materializes, but it's always good to have references in a market. I think that's very positive. If you look at our full merchant base, it's very, very diversified. So it's not one specific industry. What I like about it is it's a proof point that we're an execution company. And if we're interested in a certain market, that it will also lead to material deals in those markets.
Original investors, General Atlantic Index Ventures, they've been selling down shares. Pieter, does that matter to you? Does anything need to take the place of these investors? They're obviously exiting. They're happy with the performance.
Well, for many VCs, it's the model that you invest in companies and that there's a lifetime of the fund. So therefore, those sell downs, I don't think there's not much of a meaning in it. That's what they do. They invest in pre-IPO companies, and when they're public, they build down their
Yes.
holdings in those companies. So I don't think you can derive much from that.